Hey guys, check out this stock that dropped by 23 points in a single day, or this one which made a 20-point move in a single day, or the next one which went from 50 cents to over $5, making a 870% move in less than 2 days. So how do you find these good stocks or good opportunities to trade that usually end up in the top gainers or top losers list the next day? And how do you find these stocks before they make these big moves? In this video, we're going to be going over exactly that. And I really want you guys to pay attention and watch the video till the end, because stock selection is one of the most important skills to have as a trader, because you can be an average or sometimes even sloppy trader. And if your stock selection is really good, you're going to be really good in terms of having results with your trading. But if your stock selection is poor, or you're trading all the wrong tickers or wrong stocks, you could be really, really good with your executions. But if your stock selection is bad, your results are going to be really terrible. So in this video, we're going to be going over exactly that. And for those of you who are stumbling to the channel for the first time, let me quickly introduce myself to you guys. My name is Shaun. I'm a Dubai-based active US equities trader. I've been trading the markets for 8.5 years now at this point. And this channel is all about no fluff, straight to the point trading content that could really help you move the needle when it comes to your own trading. So if you're into that kind of stuff, consider subscribing to this channel. And with that, let's actually get into the main topic of the video. So now what I'll be doing is I'll be giving you a walkthrough of my morning routine that I follow pretty much every single day in order to find these good opportunities. And I'll also be giving you a quick rundown of all the tools that I use in order to just filter out these opportunities. And I also want to really give you the logic behind if I'm doing something. I really want to help you understand the thought process or the logic behind it. So if there are certain things that you want to start tweaking in the process to make it a better fit for you and your trading, you can actually do so once you understand the logic and the thought process behind it. Before even I dive into the charts, I want to give you another two key things that you can start paying attention to. And those would be, number one, 80% of the stocks tend to follow or move in the same direction as the overall markets. And when I say overall markets, I'm talking about the major indexes such as S&P 500 or NASDAQ or Russell 2000. Let's say S&P 500 is sort of looking like it's gapping up for before the market opens, and it looks like it's going to continue to do so. 80% of the stocks are going to move in the same direction, generally speaking. And it is, it is more beneficial to look for more long opportunities, and vice versa. If the SPY or other major indexes are sort of looking like they're going to be moving down for the day. Number two to pay attention to is 90% of stocks tend to make bigger moves because of a news catalyst. So these are two things that you can start keeping in mind and before even trying to look for stocks. And now let's actually get on to my morning routine that I follow in order to. Hey guys, just a quick segue. If you're tired of losing money in the markets and you're serious about becoming a consistently profitable trader, then check out my mentorship program designed exclusively for people who are serious about learning how to trade. This is not just another course giving you information, but this program gives you a real transformation in your ability to successfully trade the markets. You see, traders who are serious don't lack passion or work ethic, but they lack proper guidance and clarity on what exactly do they need to focus on in order to achieve consistent profitability. They keep going through books, videos, courses, gathering more information, thinking that they're working hard and getting closer to their goals, but in reality, their account still keeps bleeding. They're constantly feeling stuck, frustrated, and angry in themselves, unable to understand the nuances of the markets, which also makes them lose confidence and even experience a sense of shame for spending months and even years and still having nothing to show for. And mainly, they start to lose hope, doubting that if they're even cut out to become a profitable trader. If this sounds like you, I understand. Trading is hard, and being stuck in that cycle of frustration and being clueless about what exactly is missing, that feeling is absolutely brutal. And I know this because I was stuck in that cycle myself for almost 6 years before finally breaking through and becoming a consistently profitable trader. And I was only able to do that by building a deep understanding of my edge and gradually perfecting my ability to execute my edge. And if you're serious about learning how to trade stocks, then you must check out my program, which is designed to take anybody from not knowing anything about the markets to becoming a consistently profitable trader in the fastest way possible. You learn everything about trading from the ground up, and combine that with ongoing hands-on mentorship and feedback sessions, which are designed to keep you on track and accelerate your learning curve. So if you really want to transform yourself from a market participant to a profitable trader, then all you need to do is go through these 3 simple steps. Number 1, schedule a call with the link in the description below this video. Number 2, on the call, help me understand exactly what your goals and your challenges are with trading. And finally, number 3, on the call, I'll walk you through exactly how the program, mentorship, and feedback sessions are designed to help you go from a beginner to a consistently profitable trader. And if it sounds like a fit and you have a professional attitude towards trading, then you can decide to enroll into the program. So if you're an absolute beginner or a struggling trader, tired of losing money, wasting time, and wants to become a consistently profitable trader, then schedule a call with the link in the description below this video. You see, too many traders are unnecessarily struggling for years in the markets, focusing on doing all the wrong things. And all you need to do right now is decide, do you want to take the first step and learn how to trade stocks the right way so you can start approaching markets with clarity? Feel the confidence in having the ability to extract money from the markets, consistently keep growing your account, and make trading your primary, secondary, or retirement career. Have the freedom and flexibility to live the way you want. And finally, just stop feeling so stuck, confused, frustrated, and mainly just stop wasting time on doing all the wrong things. Now let's get back to the video. Do so. So the very first thing, as I've already mentioned, I usually start my day by looking at the major indexes. One is called SPY. SPY is an ETF that tracks S&P 500 and SPY, basically the ticker symbol. And IWM is a ETF for Russell 2000, which is a small cap index for the small cap stocks, and QQQ, which is a ETF for the index NASDAQ, which is mainly just tech stocks. So these are the 3 things that I'm actually looking for the day before the market even opens. And I want to position myself in the same direction, or try to position myself in the same direction as the direction of the overall markets. And the next thing is for me to look at my scanners. And also, just before I talk about scanners, I want to give you like a thought process or sort of quick logic behind it. Like, even when I say that I want to be in the same direction as the overall market, it's not necessarily that I would let's say, for example, if Qs, let's say they made a red day, and I were to think like in the stock or the market is going to be moving low for the day, it doesn't mean that I'm going to ignore any long opportunities for that day. What it simply means, I have a healthier bias that I want to lean in more towards that. But when it comes to, again, touching back to the previous point that I mentioned, that 90% of stocks tend to make big moves because of a news catalyst. If there's a news catalyst, the stock can move independently, regardless of what the overall market does. But it's just another thing to have in your own favor, that, if the overall market is moving higher, and you ended up choosing a stock that has a positive news catalyst or positive news piece, it's also looking like it's a good long opportunity. So now you have like 2 things behind your back to sort of give you that more conviction. Now let's actually talk about the scanners. So what you see over here, if you can follow my cursor in purple, this is my scanner for all the low float stocks. This is a scanner for all the mid cap and large cap stocks that are gapping up for the day. And the red over here would be stocks, mid cap and large cap stocks again, but these are stocks that are gapping down for the day. And the scanner settings is, let's actually start from the stocks that are gapping up, and I'll keep explaining you why, what's happening. And if you're wondering, this is a charting platform that I use called TC2000. They have good charts, but they have really good scanning features, and you can write a lot of codes that really help you, or custom codes that can really help you with your trading. So I've personally been a user of them for many years at this point, for scanner, for charts, for alerts, for all sorts of things. And as a broker, they do have a brokerage service as well. Haven't heard really good things about them, and frankly for me, I've never really used them as well, because I'm based out of Dubai. I don't even know if they offer any brokerage services, like I can open an account with them and trade with them. So I don't even know if they do offer that. For me personally, I'm just been trading with Interactive Brokers, and I've connected that to DAS, which is an executing platform. So what I've done over here in terms of my conditions is price any stock that is at least $5 or higher. That's just again personal preference, that what sort of price level stocks that you want to choose. Average volume, average 50-day volume is at least over 1 million. That's just what I like to trade again. And this scanner, when I'm running it, is like 8 or 8:30 a.m. in the morning before the market even opens. So basically I'm running the scanner 1 hour before the market opens. And the condition over here is the stock hits my scanner, it needs to have at least 500,000 volume in shares traded for that trading session or before the market open. This is basically I'll be running this stock, or sorry, scanner during the pre-market. So just please imply that everything I'm talking about, I'm trying to see all these conditions to be met in the pre-market. So volume needs to be at least 500,000 or higher. Volume percentage. Now, I generally like to look at RVOL, which really stands for relative volume. So it measures how much a stock, or what sort of volume does a stock normally does, and what is the current state of volume at this point. Is it higher than the normal? But this particular charting platform doesn't has that feature, so I just wrote a custom code for volume percentage over here. So it just kind of calculates the percentage of the volume based on average 50 days trading volume basically. And over here, I just want it to be at least 4% of the average volume when we are comparing it to 50 days average volume. So 4% of that at least during the pre-market, and change percentage is also 3% or higher. So it's already gapped up 3%, and it's gapped up on normal or abnormally higher volume compared to what it normally trades at. So what I'm trying to do over here is, first, I'm trying to find out what is moving in the pre-market and how many traders are actually paying attention. If there's a lot of traders that are paying attention to that stock or movement of that stock, that's a really good sign that a lot of other market participants are also paying attention to that. And let's quickly go over the gapping down scanner, which is pretty much the same thing. But when it comes to short selling, I like to stay with stocks at least $20 or higher. Personally, for me, again, just a personal preference. $20 or higher, 1 million average volume, at least has to have 500,000 of volume being traded in the pre-market. Volume percentage is at least 4% or higher. It has gapped lower, minus 3%, or at least, so it's gapped down at least 3% or higher. Now, these are just the minimum cutouts. When I'm trying to scan for these stocks, I'm trying to cast a wider net and find out as many things or as many opportunities as I can before just sort of shortlisting and really digging deeper into them. So at this stage, this is just a wider net that I'm just casting into the market before the market opens, during the pre-market sessions. And when it comes to low float scanner, things get a bit more different over here. Low float scanners or low float companies tend to be like really, really cheap stock and kind of like not the most legitimate companies. So things are a bit different over here with them. Price, at least they need to be at least $1 or higher. Average volume needs to be at least 500,000. Now, when I put this condition, 500,000 shares on an average daily volume, this is me just being overly selective. So a lot of times, these low float companies won't have that sort of an average volume. I'm just being overly selective. That's just personally based on my, preference when it comes to trading. If you want, you can completely remove this. Next conditions should still be good enough when it comes to just filtering out the best of the best opportunities. Next, volume in the pre-market should be at least 300,000 shares. This is a minimum cutout. Most of the time, good opportunities when it comes to low float stocks, they're generally going to be having like 1 million, 2 million, or 3 million shares, or even higher at times during the pre-market sessions. For me, I've just put in 300,000 just as a minimum cutout. Volume percentage, again, I've put in 100%, but most of the time, good opportunities at least, they're going to have a volume percentage of 1,000, 1,500, 2,000%. That is what you're looking at when you end up finding good low float opportunities or penny stock sort of opportunities. And lastly, change percentage, it's minimum 3% or higher. It's gapped up 3% or higher, but a lot of the times low floats are going to give you like they've gapped up like 50, 60%, 70%, or at least like 30, 40% most of the time. And that's when you start looking at actually digging deeper into them. And lastly, low floats. Low floats to me are basically any stock that has a 1 million to 20 million sort of a float size. And float really stands for how much demand or how much supply there is of the outstanding shares that people can actually buy and sell and actually trade. So, the supply, if the float is just 20 million, that's telling that the supply of the stock is very small and it's only 20 million. Right now, what you see is if I run the scanner, these are the number of opportunities I'm getting. Now, this is because the market is already closed right now. But when you're running this scan, this sort of tight scan pre-market before the market opens, the number of stocks or opportunities are going to look something like this. So this snapshot I took today, earlier today at 8 a.m. Eastern. So I just found like one low float stock, zero stocks that were gapping up for the day because the market was slightly weak for the day when it came to pre-market, and two stocks that were gapping down. If I would have waited and taken another screenshot of this around at like 8:30 a.m. Eastern, I was actually seeing like a little bit more, like three or two opportunities over here, maybe three stocks over here, and another three or four over here. So once you've done this, that's where the step two comes in, where you start doing your research. So for me personally, I've just used in Chrome because this is the browser. I'm not logged into anything. So I just want to show you the websites that I personally use. One is called Benzinga Pro. I'm just not logged into Chrome right now because this is not my primary browser. I use Edge mostly. But just to show you the website, this is a premium tool, Benzinga Pro. It's a newsfeed subscription, so it gives you really quick, speedy news. Benzinga tends to be really good when it comes to low float stuff and low float stocks, and they give you low float and small cap stocks information on them really quickly. And Briefing is another service that I use, another premium service that I use. They tend to be really good when it comes to mid cap and large cap stocks. These are paid tools. They can be expensive or pretty affordable or even cheap depending on who's watching it. These are the two tools that I use. If you do not want to subscribe to these things, there are free tools like Earnings Calendar, of course, is something that you might be looking at every day. So this is where you can start finding more information on the earnings of the company. Finway is another great tool. All you can do is, let's say we were finding out GTEC. So you can just come in here, GTEC, you can just enter the ticker symbol, and you can come down all the way and March 26th. So this company reported some sort of a technology's fiscal net income surges. So it seems like they were making a net income, and the net income seems to be increasing, and that's a positive catalyst for the company. And all you'll be doing is like whatever shortlisted opportunities you have, like 7 or 8 good stocks that you found out, all you're going to be doing is quickly doing a bit of research. And if you want more information, you can go into and start reading these PR news wires and all that. So it's not opening for some reason, but you get the idea. Hopefully you can start reading and get more information. So Finway is a great tool for that. Of course, these are free tools, so you can only expect what you pay for. I mean, so you're not going to always be able to find the latest and the greatest information on the news all the time. But it's free, so you can't beat that, right? And another great tool, Yahoo Finance and Yahoo Calendar. When it comes to earnings, Yahoo Finance, you can do the same thing over here. Look for information, what's happening in the markets, or what's happening with that ticker symbol that you're looking at. And another great tool for earnings, especially, it's called Earnings Whisperer. It's again a free website. Like you see over here, all the earnings results are over here. So you can use these tools and find out exactly what's causing the stock to move, and so many traders are paying attention to that. So that's essentially what it is, guys. And after that, it's really about doing your technical analysis and planning your trades and that sort of things, and basically executing your plan. So that is exactly how you find good stocks to trade. In fact, this is my exact process that I follow every single morning before the market opens in order to find good opportunities to trade for the day for me. So I hope you gained some clarity and you found this video helpful. If you did, please consider hitting the like button. Let me know what are your thoughts about this video, or what was your biggest takeaway, or if you have any other trading questions, let me know in the comments down below. And if you want to see more trading related content that could really help you move the needle when it comes to your own trading performance, consider subscribing to this channel. And with that, the market's also closed. I'll be calling it a day, and I'll see you in the next one, guys. Take it easy. Cheers.